You're watching Famous Dave on YouTube.
Hi, welcome back. My name is David Lincoln, and I just wanted to talk to you for a second before we start and just kind of give a little background for some of the newer people here, possibly watching. And look, my shirt's kind of see-through. I think that's because it's the same color as the green screen. Anyway, I was a options trader at the Chicago Board Options Exchange for several years. I know when you come on YouTube and you look at trading videos, there you can, the good thing is anybody can come on YouTube, and the bad thing is anybody can come on YouTube. So just to kind of establish my sort of credibility to an extent, I just wanted to give a little background on myself really quickly. I started as a trader at the Chicago Board Options Exchange in essentially 1995. I traded there for several years. Then I switched and I worked as a bond options trader at the Chicago Board of Trade, which is basically just across the street in Chicago from the CBOE. So I was at the CBOE for, I think, 8 years or 10 years, and then I was on the bond floor for 2 years. I traded the 10-year and then the 30-year bond options. So I was trained by a trading firm, a market maker firm, and went through a very rigorous training program, which took about a year. My training program took me to San Francisco, which is where the partners from our firm were. So I had to compete. Basically, I had to compete to get into the trader trainee program. So I was hired by this firm. I worked as a clerk. We competed to get into the trader trainee program. And once I was accepted into that, I was trained for a year in options trading, and then became a market maker at the CBOE. So I have extensive training in options theory and execution, etc., whatnot. Anyway, I just wanted to give a little background. I figured if each video I can give it just a little bit of background, it will. It's kind of interesting stuff to kind of establish my credibility to some extent. Anyways, let's go to GME and UVXY. First of all, UVXY, we are still waiting for a split. I just pulled up online to see if there's any news. I just keep searching under Google to see if there's any news on the split, because usually we would have a reverse split by right now. So it's kind of strange that we don't have that. But it's coming. It's surely coming very soon. Yeah, GME. So GME was really a debacle for me. I was just trading VIX products for such a long time, for months and months and months. And then I jumped into GME. And, I'm just like the quintessential example of the person that all of these Wall Street Bets people talk about, the so-called bad guy boomer who, shorted GME and got crushed as it rallied. And indeed, it has not been a good run for me in GME. However, things are looking up. And have been going better lately. The current position I have now in GME is I'm short out of the money call spreads and out of the money put spreads. So that would be known in the options trading world as an iron condor. So if I show you really quickly, I just have a very small position on right now. But in GME in May, the May 21 expiration, which is 45 days out, I am short the 50-60 put spread and the 270-280 call spread. So if we quickly go to our screen here, and the screen that's behind me is a Thinkorswim, which is a free program that you can get even if you're not a member of this brokerage. and it's a pretty powerful program. It does a whole bunch of stuff. But what we're looking at here is on the left side is a watch list of different stocks, and on the right side we have part of an option screen, and the bottom here are some of my positions. And you can see down here, let me see if it's framed properly, but essentially I am short one put spread and one call spread. So if we go, I'm going to try to kind of center this a little better here. There we go. So if we look down here, I'm short one put spread and one call spread out here in May. And essentially, if the stock stays between these prices, 270, if it stays between 270 and $60 for the next 45 days, then I slowly collect money. And that seems like a reasonable bet, right? That it will stay between 60 and 270. So very, kind of a low risk trade that just collects a couple bucks a day. And the reason I have such a sort of a low risk, low return trade is because other stuff hasn't been working for me. Now, my philosophy on this whole GME thing is essentially that the company is, like the stock price right now, is based a lot on hype, and the expectation that this new team that they're putting in place is going to do amazing things for the company. And it's, in my opinion, it's very easy for them not to do this. I mean, the price is pretty high right now. The valuation of the company is way up there. I think it's around $10 billion. And so they have to execute and come through and actually turn this company around and make money for the price to stay up here. Let's see. It would be interesting to know the top 3 useful things you learned in that training program. Yes, well, a lot of the focus of the training program I went through was how you do things as a floor trader. So at the CBOE, as an options market maker, you weren't sitting in front of a computer that looked like Thinkorswim. It was a lot more rudimentary. There were a lot more. It was very rudimentary back then. There wasn't a lot of great software. Everything was done in what's called an open outcry auction, which means that you stood in a little area and a broker came into the pit, which we call the area, and he would yell out some option, right? So if we look at GME here on the screen, we see this. The market's closed right now, but we see all these different options. So for example, this May 270 call. The market on the screen here behind me shows 2170 bid at 24. Now that's obviously a very wide market, but the way it would work is a broker would come in and he would yell out, May 270 calls. And everybody would kind of look up at the screen in front of us and shout out the market. So in this case, they'd look at the screen and shout out 2170 bid at 2405. Now, back then, everything was in fractions. So it would have been something like 21 3/4 bid at 24. And the first person to yell the market out is in control, sort of. So if the broker is a buyer of these calls, the person that yells out the best offer. Now, a lot of times people would just look up at the screen and yell out what it said on the screen. So in this case, it might be the offer was 24. So everybody yells out 2170 bid at 24. He might say buy 100, in which case people would say sold, and he would divide up the order between who was standing there. So if there's 5 people standing there and it was 100, then he might give 20 to each person. Now, there was a pecking order of who got what. It wasn't always divided evenly. It would be some people got more, etc. But we were taught how to exist in this environment of the pit. So it was a lot more than just having an option screen and somebody comes in and pays the offer and you get to sell some. There was a lot of different dynamics at play. So, and it was a fairly sophisticated training program, but I'll discuss it more as we go along. Uncle Bruce YouTuber claims that there are many undeclared shorts due to failure to deliver loophole. I think that getting too caught up in the minutia of the hard to borrow market, short shares versus long shares, etc. It might get you too focused on something that's that may or may not affect the whole situation here. The situation essentially with GME is the stock is up something like 800% over the last couple months, right? We've had a huge short squeeze, and it rallied off of that short squeeze. And there's been several positive news catalysts that have made this stock move higher, right? They had the CFO got changed, a couple different people got changed in the company, and earnings came out, and there's still a whole bunch of hype around it. And I think you really cannot separate the fundamentals of GME from all the hype, right? Wall Street bets. People are following Wall Street bets. People are devising entire funds that are just based on quote unquote meme stocks. So you can't really separate GME and what the company is doing and the actions of the company to make to sell video games and to focus on their core business. You can't really separate that from the whole phenomenon of this being the key quote unquote meme stock and all the hype that surrounds it. Because in my opinion, the hype surrounding this stock and the power of all of these people jumping in and buying the stock far outweighs any other catalyst or any other forces right now. So, and in my opinion, although I might be wrong, this hype is not going to last forever. People eventually move on. It's hard to keep a certain emotion. If you think about human nature, it's hard to keep a certain emotion for too long, right? You can be mad at somebody. Think about just any emotion, like being mad at somebody. You can be really mad at somebody, but a month later, you're still as mad as you were before. And the same with the stock. I see it as a lot of people buy this the first time. If we look at the chart behind me, the first time people bought this stock and you had this big move up, and people made all this money, that was great. People, it was a great thing, and people made a ton of money. The second time it rallied up, it was a little bit less, right? Here's the first move up to 500, and some people made money. Some people certainly didn't make money because for every buyer, there's a seller, and somebody bought this paying $513.12. A lot of people bought this around 300. But let's just say in a perfect world, some people own this from down here around $20, and they were able to sell it, let's say, at 200, and they made 10 times their money, right? That was the huge win. Okay, so then the next time it popped, it was a smaller move, right? It was from 38 to 200 up here. And then we had another big move up, right? A third move up. But each time it's kind of like a smaller move. And a lot of the people that own it right now, they got into it because of this like 500 move. And this other move here. And if we just kind of grind sideways for a longer and longer time, people are going to get antsy. They're going to say, well, nothing's happening here. I want to see this double again. I want to see this go to 50,000 or whatever. And if you have a stock like Tesla that's got all these irons in the fire, they're doing all this different stuff. Elon Musk is talking about we're going to fly to Mars and all those other things. Then you have the potential for a real story and a continued move higher. But GME doesn't have that opportunity at the moment. Now, yes, the company could move into other areas, and they're certainly doing all they can to take advantage of the hype surrounding this company. A lot of people are focused on this company right now. There's a lot of hype going on, and they're certainly trying to figure out how to capitalize on that, but they haven't figured out how to do that yet. And the odds are that this is going to grind lower over time. Now, I may be wrong, but let's check back in a month from now, right now. Okay, my prediction is we grind lower and this slowly moves lower over the next month. Let's come back in a month and see if I was right. Today is the 6th of April. We'll check back in a month and see if I was right on that or not. most options traders blow out in a short period of time. That is true. And that was true at the CBOE as well. The fact that I did trade there for 10 years means that I did not follow that trend. And in fact, the reason why I had a long career as an options trader was because I was given training by some very smart people who taught us how to survive and be profitable. The other reason was that we were in a good position at a certain period of time where, standing in the pit, we had an advantage over retail people. We could buy in the bid and sell in the offer. It was set up in our favor to make money, which it's a lot different for me now being outside the pit and trading as a retail trader, because the advantages we had at that certain time we don't have anymore. So it's been a tough adjustment for me to switch to retail as a trader. Let's look through your comments here. Do you think the VIX will keep dropping? Good luck with GME. The VIX has been falling for a while now, and we were anticipating it for months and months. We were saying, when is the VIX going to go through 20? When is the VIX going to go through 20? If we look at the chart, for months and months, we were saying it's going to go back down to where it was before at some point, but we just don't know when. Let me see if I can get a longer chart of the VIX here. All right, so you can see here, and I'm going to get out of the way again, the VIX, and we were up in this area around 20, and still, as I was saying before, what's up, Brian? Good morning. As I was saying before, we are still coming off of the whole COVID thing, right? You can see the VIX here cruising along around 12 to 14 range, and then boom, with the COVID thing, the big spike, and we still could be seen as coming off of that. Now, where's the bottom going to be? We don't know, but there certainly is. It seems like that we're trending lower, right? And so there's no reason to think that we're just going to stop at 1758, which is the recent low, right now. A lot of times what happens in the financial markets is when we get a trend, stuff continues to trend for way longer than you think it should or it could. And so to start to back up the truck and to start to say, I'm going to take a stand here and I'm going to buy 17 in the VIX because I think this is the bottom, could be risky, because we could continue to trend way lower for a while, right? We could get back to 10 again. There's really no reason why we couldn't. That being said, the VIX is at the lowest point it has been in quite some time, in a year. So to come in now and say, I'm going to short the VIX, you're going to look pretty silly if we bounce off this point, because if the VIX pops back to 30 and you shorted at 17, people are going to say, well, you sold the absolute bottom in the VIX. So if I was going to initiate some sort of short position in the VIX or VIX products, I would not choose to do so right now. Yes, it's trending lower, and yes, it could go way lower than here. However, I would wait until we get some sort of pop, some sort of down move in the market, and then jump on. Because you kind of do risk sort of selling the bottom right here if you were to jump into a short. I think it certainly could continue to trend lower from here. I don't know where it's going to go to, but it certainly could continue to trend lower. But I would not jump onto a short right at this particular moment. Tesla is underperforming market. Maybe GM looks better than Tesla. I mean, the story of Tesla has been one of continued rise, right? So every time you kind of count Tesla out, Tesla's a monster, first of all, to trade. Look at this chart from 3 years. That gives, I think, a better perspective. A lot of times when you're looking at charts, I would recommend to change the times you're looking at a chart. So if you're looking at a chart at a certain time period, back it out as far as you can. Look at it at different times, because what you'll notice is that you could look at a stock in a certain time period and it could look like a screaming sale, right? Like here's Tesla, and let me recenter this screen again. Just giving Tesla as an example. Here's Tesla I think this is a month here. And it looks like, oh, it's at the recent high. Maybe this would be a good time to sell some and buy it when it goes back down again. However, if we back out to 3 years here, now what do you do with that chart? I mean, that looks like it's just had this huge meteoric rise, right? But Tesla, very hard to count out. This could easily take out the 900 high and move higher again, right? It's done that in the past. Very hard to say what's going to happen from here, just looking at this particular chart. One thing you can say is it's not going to stay right here. David, will the U.S. go back to normal? I mean, I guess it depends what normal is. In the grand scheme of things, if you think about the VIX right now in volatility, it kind of makes sense that vol has come in, right? The craziness of and just the volatility of President Trump's presidency, and just the fact that he could tweet at any time and the markets would move based on that. That is gone now. So there's no longer, and much to the detriment and much to the displeasure of all the news media, who was making a ton of money when Trump was president. Let's face it. It's much more fun to watch the news when President Trump was around than Biden, right? And indeed, all of the major cable networks have lost a lot of viewership since Trump left. Now, that all speaks to lower volatility, right? I'm not going to discuss this in a political way, really. Some people are happy that there's not as much, some people want the government to be something that's not making news all the time, that's there in the background, but is not necessarily, making breaking news constantly. And certainly, the market's near the all-time highs, right? Which usually means volatility is low. B, everybody's gotten all the stimulus money to put into the market, and all those stimulus deals went through. C, there's not a lot of stuff going on right now in the world as far as for the U.S., like foreign policy, like some war or something. So, with the market near all-time highs and less going on as far as like tweets from the president and whatnot, all those things kind of make sense that volatility would come in. Now, certainly we don't know what's going to happen in the future, and there could be a black swan event. Remember, black swan events, right? Something happens out of the blue, and all of a sudden volatility spikes. That can happen at any moment here, right? Any moment. We can't predict that. But as my buddy Brent has said, this has finally been a great period for short volatility. We had basically the last year or two has been not very good for shorting volatility. In fact, it's been very frustrating. A lot of these products move sideways for a long time. If we look at VXX, you see this huge spike we had from 2020, right? If you had shorted volatility in 2019, it took you, almost 2 years. If you had sold volatility, in the beginning of this chart, VXX 26, almost 2 years later, VXX was still 26. Now, finally, we've had a nice down move, right? From this spike up to 78, you see this nice down move in VXX. And certainly, we could continue to go lower. This is not a stock. If this was a stock, you might say, oh, in fact, if this was a stock, it would be a screaming buy here, right? You're at the low. You're at a 3-year low. But this is not a stock. This is based on futures that are always changing, and thus this can easily continue to move lower. VXX here. We talked about UVXY. UVXY generally, once it gets around 8 or 7, they announce a reverse split. And we've almost broke 5 right now, so they have to be scrambling to do some sort of announcement on a split. Casey, what trends to watch for the long term? The stuff I've been talking about, in the last few minutes is what you would call macroeconomics, the general state of the economy, the general state of business. what's going on with the Fed, what's going on with interest rates. These sort of things is macro stuff that sort of affects the broad market. Now, the stock market focuses on different things at different times. Sometimes the stock market is focusing on political things. Sometimes it's focusing on bonds. It sort of changes. But right now, certainly everything is at a sense. There's a sense of, volatility coming in. Everything's back to normal, et cetera, et cetera. Let's take a look at the VIX term structure for a second, because the VIX term structure is always a key to trading volatility. The VIX term structure is going to show us the relationship between the futures, and it's going to show it's very frustrating on my two-screen computer sometimes to move it around. The VIX term structure currently, and has been for quite some period of time now, in a nice downward shaping of contango with almost 10% contango. Now, this VIX term structure pretty much just confirms everything else that we have going on right now, right? So if we look at the term structure here, and I get out of the way once again, we can see this number on the left side, 9.93%. That represents, almost 10%, and this is a monthly number, 10% per month, that stuff is decaying, right? So term structure, when you see a VIX term structure that is so just upwardly sloping like that, like it is currently right now, this just once again reinforces the fact that the market is in a state of calm. It's all green lights to continue rallying. There's nothing in the term structure that speaks to some sort of concern, right? Now, the term structure, we always say, is not predictive. However, looking at the shape day to day is going to give you some sense of what people generally feel about the market. And when you have an upwardly sloping curve like this, where if you look at each month, I mean, it's almost just, there's a little bit of a curve between Ak and Nov, but besides that, it's each month is slightly higher than the next, and it's just a perfectly smooth curve right now, right? There's about $2 between spot and the front month future. We're about halfway through this cycle, and everything just looks completely smooth right now. And there's your opening bell. So at some point, something's going to happen to disrupt things. But right now, the market really kind of in doldrums. And if you are short, VXX or UVXY in an intelligent way, and by an intelligent way, my favorite ways to short these are buying put spreads. It's continuing to work to be short these. Once again, I wouldn't really initiate a short right here because we are at the kind of the lows, and it's kind of difficult to trade UVXY now that it's down around $5. I mean, if we look at the chart here, you can see there's just not that much juice in any of these options. And if I was going to trade UVXY, I would wait until we get the split. Now, the split's inevitable. It's got to come in the next month. I'm surprised it hasn't come yet. I keep updating my Google to see when it's coming, but it will be coming soon. All right, now that I've gotten the screen to move over, I'm going to move it back here, and I'm going to let you go for now. Let's see, VX1 down, M1 down. I'm going to let you go for now, but my guy who films me, I have a guy who helps me behind the camera, and it allows me to get out from behind the screen because he comes and films me like walking around and doing different stuff. So he's back now, so we're going to do some shows like that. I'm going to add some shows about just specific topics to do with life in the trading pits, what it was like. One topic I'm thinking about exploring is how you become a member of the exchange, what that process was like, meeting before committees, being investigated, and other aspects of what it was like to be a floor trader in Chicago are coming up soon on the channel. I want to try to break away from the screens a little bit and do some new fun stuff. Still term structure, still have term structure trade on break even around 27 coming in nicely. We'll look to repeat on small pop again. Yeah, I mean the best way to enter a short trade, like I said, the short vol has been working. It probably would still work if you were to short these products right here, but if for me, I would wait until we get some sort of pop in volatility before I jumped onto the short side. And as far as trading from the long side, I don't recommend that you stay long UVXY for more than 48 hours at a time. So if you really feel that you need to be long volatility, you have to time it strategically. And if it doesn't work, get out, because this is going to continue to decay and move lower over time. Just because you see UVXY and you have that nice number of $5 as compared to 60 last year, doesn't mean that it's a screaming buy. This can continue. It will continue to move lower over time. We might get pops in between, but it will continue to move lower over time. So be very careful before you get long these products. That would be my advice to you. All right, thanks for watching, and I will see you very soon. It's great to be back on YouTube.
You're watching Famous Days.
Thanks to subscribers, thanks to Patreon supporters, and leave a like or comment. It's all very appreciated. Thanks, folks. I'll see you next time.